Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are doing the post-Christmas, pre-New Year's special. We're going to take an inventory of the gifts the markets have given us and the ones that we want to send back. We are recording here on Saturday morning. That's unusual. You can tell it's a holiday. The 28th. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing good, doing good. A
And the
little bit.
holidays were good, I take it.
Holidays are good, and just looking forward to the having a few days off.
Agreed. The markets certainly didn't take a holiday. We had some action this
No.
week that we want to
Hmm.
review. There's a couple things happening in the commodity world which we'll review, but before we without any further delay, let's jump right in here on the S&P.
All right. Last week we talked about the ideal counter trend to get the stall out. Ideal level for the counter trend to stall out would be around 60-20, and sure enough, we got right up into that zone that's marked off. Can you
Hmm.
see that clear enough?
Yeah,
But
yeah.
and then we reversed coming into Friday. So I think the counter trend looks pretty good, you know.
Hmm.
You can even drop a trend line on there. So there's your counter trend high. Well, now the question always is, what if this is a pullback low and we just have one down day and now then we continue to move? Well, our rule is always the same. We have our levels in the cash, we have 60-20. If we settle above it, it's sort of like how we did here in late November, December. If we can manage to settle above, then we'll have to rethink this and trade it accordingly. Otherwise, we did get the counter trend high, and the market did react off of that level. So we're going to just play it that way. Makes sense, right? It's
Yeah,
just
and it was only a 2 day counter trend and barely 2 days.
Yeah, it was a very kind of a weak counter trend. I was
Hmm.
I was going to mention that. So here we have the continuation chart. This is coming squares coming off the September October lows. This is actually the September low, October 3rd low. Sure enough, we got up right up into the 50% of the square, and we stalled out and reversed. And we talked about how we got very close to the ABCD. So remember we talked about having that in the background as a
Yep,
as
yep.
a as a point data point. And here is the December contract. Again, we didn't quite reach 50%, but you can tell it's weak. We did reach structural resistance up here. We talked about how now, after that big break, we have all this couple of weeks of data days sitting on top of us now, right? And and is this a head and shoulders kind of a thing that's
It's
forming?
it's absolutely looking like a Head and Shoulders. I saw the same thing.
And yeah, so that's a possibility. We'll see if anything happens out of that. The
Hmm.
other thing is, I'm always watching out for these little triangle formations. So we have this kind of a pattern potentially forming, which kind of whips everybody out.
Yep.
So we want to watch for that. It might not mean anything, but just to keep an eye out for that. Now, the this is the Dow
The
futures.
Dow, yeah.
I remember typing out 43,723 last week, and
Yeah.
sure, that was
Look at that resistance. Very good.
that was quarter of the square, and we dropped right into this 216 level, the square 72, and the pullback was pretty much right on there, just like the cash pulled up right up next to it. So everything so far is pretty good, textbook wise, almost
Mm-hmm.
because of the numbers. And in the Dow, the pullback could really, really go because look at that, we went half a square, leading everybody else. For the Dow, I would say we want to watch it, give it a little bit more room because it's very the counter trend was very shallow, let's just say, which just means it's very weak, right? And if the Dow is still leading, this is not a very positive sign.
No. And it was about, looks like it was almost exactly 50% retrace on the,
Almost.
yeah, quarter of a
Yeah.
square.
Hmm.
Hmm.
And so I think the zone between this 44,300 and 43,723, I should just round it off to 20, but that area, this
Right.
area here becomes important for the Dow. And of course, taking out this low, which just happened to stop exactly at 216,
Hmm.
and that would be around 42,540, let's say, or 538. That's just it might really go. So this low really can't be taken out. Meaning, sure it can be taken out, but not if you're looking, not if you're bullish.
And that's looking like another Head and Shoulders type formation is trying to work. You got your left
Yeah.
shoulder, the head, and now
Hmm.
it's working on the right shoulder.
Right. Not as clean, but it's there, right?
Mm-hmm.
The other one just kind of popped out of the screen. So, and we talked about this happening earlier on, and sure enough, we went up and made another high. So we were tapping along this line when we tripped, right? And it's funny how we held right at the midpoint. So
Yeah.
this chart is pretty good. So we'll continue to watch it and see what happens. But this low now becomes a critical point, and we want to see if the Dow holds this, if our whole counter trend thing is gonna sort of work out.
Yeah. Yep.
um, Obviously, same thing with the futures. If we can get below the 90, I think we don't even have to get below the low. Anything below 59.40 is going to lead to some weakness because that's 90 up from the August low. Well,
Is that the March contract?
yes, it is. So that's all set up. You can tell it's just
Yep.
not a lot of lines on there yet. So that's kind of the roundup of the daily charts. Let's move over to the weeklies.
Your half square is what at about 60/40? What is that up there?
It's 6,100 exactly.
6,100.
Mhm.
Okay.
Actually, let me edit that.
So the key levels on your stuff right now is 6,100 and 59.40. Watch those for the week.
Yeah. And for the cash, it would be this 58.48 level and
Right.
60.20.
And 60/20. Yep.
We're kind of working that zone now. All right, let's take a look at the 30-minute before we get on to the weeklies. Wow, what a chart, huh? You'd think this wouldn't be a holiday chart, but
Yeah, that's nice.
nobody fell asleep. So we were looking for a counter trend. So we got that. We stalled out around 61,
Hmm.
and you can see that here. Um, Started to trade lower. Just really couldn't get up above this quarter of the square. If you guys can see the gray lines, there's a square line here. We
Yeah.
stalled out right at the quarter of the square and then just dropped right to the next quarter of the square, which was at 59.87. And here's the Friday, price action. We rallied back up to 60.33, which just happens to be the 50% of the square. And getting stalling out and closing under a key level is probably not the most positive close for
No,
the
it's not the best
you know
spot.
it's not the
Right.
best spot, but we need to note that. And if this weakens down, below 60.33, surely we're going to go up and test its 59.42 level. This is all based on the 30-minute. These are 30-minute numbers,
Hmm.
and but they hold out for higher time frames depending on what you're trading. That's kind of it. You want to anything? Nothing much to add because everything was fairly obvious, right?
Yeah.
Um, all the levels, everything hit perfectly. Oh, we can look at this. Might as well, right? We kind of
Hmm.
watched it for a month now. So, so finally, the 108 weeks might be paying off. We'll see. It's a couple of bars late, but price wise, we definitely hit the trend line, and that was a critical thing to watch. But that doesn't mean we can't go up and tap it again. As far as looking at it, from that angle. But the ABCD, I think, completed. It's good enough.
Yeah.
You know,
And the 5810 is key now there.
yeah, this area is really key. So obviously, if we take out last week's low, I think we're definitely going to slip through there. So we got to watch that. 5810 is really, I think 5810 is really for the longer term. If we take out 5810, then I mean, look, sure, we have quarter square here on 55, 55, 25 or so, right?
Hmm.
55.30 or so. But really, if you go from square to, look at the main levels, then the next level really becomes 52.35.
Hmm.
And if you drop that, then we get back into 46.64. And that's where we find some structural support. We have these highs from July, and then we have this high from 20, what is that, 22, 21, yeah, 22 highs. So, I mean, all of that 72, these things, they're all in this zone here. We could be in for a ride. We'll see. But everything
Yeah.
starts up here. We'll see how it all starts. 58.10 is the level we're watching, and it's really between 58.10 and 61.25 basis the weekly. Those are the key numbers. And the other big thing this week was, we had an inside week. So obviously taking out high or low, and we're closer to the low than the high, um, would set us up to actually go and test this. So there you go. That's what we have setting up there.
Not exactly the Santa Claus rally the Bulls were looking for, huh?
No, either that or Santa Claus came early, kind
I
of.
think so.
All right, here's the our standard, normal, the weekly S&P, the futures chart. And here, I guess we talked about this last time.
Hmm.
And so 225. So we have 247 by 247, which is we're running on a score of 45, half of 90, right? And
Hmm.
man, they did not square out perfectly,
Perfectly.
you know.
Perfectly. Yep.
And we had this 61.66 right up at that's the price level. And we had an ABCD square target coming off the 20. I mean, this chart to me kind of tells the story in the big picture of all the other ones because how complete it is. We went to the square with an ABCD on a weekly chart.
It's a weekly square out. That's the
Yeah,
key, man. That's big. It's not like it's 30 minutes or 4 minutes or something, short.
yeah. So that tells me, I mean, something really, I mean, sure, it's not a 90-week cycle or 180-week cycle, but what I found is when the smaller cycles, we pass up like we had a 225 by 225, you could have hit perfectly if we tapped there, but we got to our level, which was 56.72 right there
Hmm.
on time, 225, and we had this little reaction. Remember that?
Yep.
So
Sure do.
when you pass that up, and it's very likely that we'll stall out at a sort of what we think is a weaker number. But the point is, price and time balanced out. That's the
They
key here,
completed. Yep.
right? So that's
Yep.
the whole principle behind squares are watching for where these balance points are. And sure enough, it balanced here. So let's see. You guys, I think we covered all the things you have to watch. We don't have to make this overcomplicated because I think the simpler we look at the market, the easier and more practical. And so that's the story. So watch on the weekly basis. Definitely, we want to watch that inside bar and see how that. I mean, we might not just be finished, all done with it, just in a couple of bars, but just watch that for next week. I think that's the key here.
Hmm.
And of course, the 61.66 sitting on top, taking that out and sitting on top would be the thing to really convince me. And above that, we have the 270, right? We have 270 by 270 here if we were to just continue. And that's that 6,400 zone that I marked out.
Where does
But
270 in time put you?
May May 25th,
Hmm.
yeah. And
So,
price is up in 65.25.
so it's pretty simple. We settle above 61.66. The odds favor we're going to run to May and go up to that 64 and change price.
Yes, I would say that. That's true.
Yeah.
Plus,
Yep.
then if that happens, then we're running 135 from the low in 22, and that would line up with a couple of different places. So we have
Hmm.
135 from there. We have 270. That would be pretty grand, but then again, everybody else will see it too, right?
Yeah.
And the market has a sneaky way of bringing in highs where most people miss it. So that's why this we should probably watch. I've seen so many really good highs come in, without a whole lot of noise, let's say.
And I think that's really important because I know that I'm susceptible to it when we miss like a 225 by 225 or we get a
Mm-hmm.
reaction and then it fails and it makes a higher high. I'm like, oh boy, what happened? And
Mm-hmm.
then, as you said, on a less sort of well-known number, this thing could top out, and that's a perfect example of it with the half
Yeah, and that
squares.
leaves you, yeah, and that leaves you, the analyst, kind of holding the bag, right? Like, oh, there's nothing there. So,
Right.
and here I just noticed while you were talking, we had the 225, but we also had this 5672. And you
Hmm.
can see once we settled above that, right there,
Yep,
it was pretty much of a done deal, right? We took out the high, settled about 5672, and 225 was like not even there. I mean, sure, we had to do a little bit of grind to get on top, but after that, just flew right to the next 50% of the square.
for sure.
And so anyway, to the downside, I guess we have this 5672 to deal with. So anyway, we have plenty of time for that, maybe.
Mm-hmm.
So
Yeah,
we'll
yeah,
see how
let's
that
see.
turns out.
Let's see. It's good stuff.
It's good stuff. And I just wanted to bring in the Russell because a lot of people have been asking, and this is just the weekly. Of course, we talked about this, I think last week or the week before, about how we got this false break right at the 180-degree level. So that was basically gimme, that wasn't even
Game
tricky.
over.
Yeah, it wasn't even tricky.
Take
So
a picture, take a screenshot of this as a perfect example of what happens at a false break.
yeah, that's true. Yeah,
It's a false break. It's on a 180, which is the full
hmm
square, very important number. And
hmm
then look at the reversal,
yeah, looks good. Looks good. Really the next support level is really down here to, 2005 and 2036. If 2036 is the 50% of the square, and I guess I put 2005 as a, can't remember where I got that. Maybe the structural support. So that zone becomes sort of the support
which is
level.
10% lower, by the way.
Yeah, a lot can happen between here and there. So,
Yeah, yeah.
um, speaking of patterns, I just noticed how we had this false break, this triangle. We
Hmm.
work with triangles a lot. It was perfect, huh? Ran up into
Yeah.
180 as a false break,
Yep.
and
Yep.
then whoosh
Full
right down to the
square.
90, full square correction. And
This is also another good example of how the sort of the soldiers are leaving the battlefield, right? All the little guys, the privates in the Russell, smaller
hmm
stocks,
hmm
made a false break and are turning down while, the bigger stocks that are being held up by these, this concentration in this Mag 7
hmm
haven't broken really yet.
Well, some lead and some follow, and we'll see
Yep.
how it goes.
Yep.
And I'm glad we looking at a lot of indices and kind of looking at the spread because I think it's important too. All right, before we get into bonds, I wanted to just tap through the midweek charts that we look at because we haven't done the midweek show for a while, and just because of the holidays and we were just busy
Sure.
doing other stuff. So just to tap through it really quickly, then we get back to the bonds and finish up the rest. So 10-year, last time when we left, we talked about the 50% of the square, right around 110, and it's just and we talked about how it's weak below, obviously, right? That's our basic game plan, and you can see it's moving without a whole lot of problems. And
Well, that's a
not
nice example, Barry, of a get above but can't stay above, right?
absolutely, absolutely. And this bar right there is the key. When the low of that bar gets taken out, usually at a 50% level or a full square,
Hmm.
that just gives you the signal.
Yep.
And here, we have a 90 degrees down would be down around 104, 104 and a half or so. And that would give us a false break. We'll see what happens there. That's kind of in line. Yen, we talked about the 50%. We squared here, corrected, little bit of a messy correction, got under the square a bit, but got right back on top. And now we're above the 50% of the square, which would lead us right to the 180, and that's around 162.
That's get on top, stay on top right there.
Get on top, stay on top, and a potential false break here, or we take it
Wow.
going to new highs here. You know,
Wow. Hmm.
so a lot happening in the currencies. We'll continue to watch them. So basically, above that level, you know, this is bullish. We had the little bankers, little bankers,
Wow.
went right up to what 135, and back. We have a little buffer between 60 and 57. So if we can hold here, obviously we can correct and run back up or whatnot. But boy, if we start failing here at 57, this is probably not good.
Hmm.
Especially since we almost squared. We were off by several too many bars to count it, but it's we ran up to the right number.
And that's also potentially a lower high off that 22 high too.
Oh, definitely. Yeah. Yep. So let's move on to miners. Well, kind of hanging in there, getting
Battling
comfort
at that half square, isn't it?
badly. Yep. So 44 is the 50% of the square, kind of hanging in. Yeah. And it also looks like we could be doing an expanding triangle, which would make sense. But anyway, we have a good trend line going, and they're slow, but they're active, and the trend is still up. We did run out 108 days, 108 weeks, so
Hmm.
that's something to note. Um, there could be a decent correction off of that, maybe into next year, but we'll watch. But 44 is the key. If you can hold above that, great. If not, expect for the weakness and the correction down at least to the trend line. And speaking of corrections, here's CCJ. I drew in this expanding triangle a while back, and you can see we went back and tapped it again one more time, right at the
Hmm.
50% of the square.
Hmm.
And again, if we can hold above the 180 degree level, which is 50, let's say 50-50, um, we in the long run, this is very bullish if we can hold above that. And this would be just a correction, like a dip. But the fact that they haven't really respected this a whole lot, I'm not so sure. Although the last one, we held at the 150 level, this bar right there, did
Hmm.
there. So yeah, that's the uranium set right there. See what
Okay.
happens. Go back to
Bonds.
bonds and wrap up. Give me 1 second.
Not a picture of strength, is it?
No, it's a little bit weak to say.
Mm-hmm.
We talked about it taking out these April lows. If we get any lower, it looks like we're well on the way to do that. And 50% of the square is around 110, 110.23. It really looks like that's where we're going, if not worse. So, I mean, 90 would get us, we'll take out these October lows. You know what I mean? Like obviously getting here is
Hmm.
well below October lows, and that's right around 105. So looks like that's the direction for now. After hitting, after getting through, I mean, we could call this a counter trend, but really, uh, we've just been down, down, down the entire time. So I
Hmm.
think I think it's very weak. This could be called a little bit of a counter trend, but to me, it's very weak. The bonds continue to go that way. Let's take a quick look at the weekly. So on the
Critical,
weekly, mhm,
critical spot right there.
yeah, critical, and we're right there. I mean, we even went a little below
Hmm.
the
Hmm.
156. So it looked just, everything's sort of pointing like it's going lower, and we take out this square level, and we can't really get about 114. I think this 107 level is really where we're headed, and that would give us a potential false break off the lows in 23, and we'll complete this ABCD. So that's kind of what we're watching. And above 114, if we can somehow, hang out above here, sure, we could probably consolidate a little bit more. So the key thing for the downside basis of weekly is this, it's slipping through, let's just say slipping through this week's lows. How about that?
Yeah. Yeah.
Um, yeah, that would be the key.
I think that's a
So
good marker.
good marker, and bonds are trending. So there you go. Trade away, right?
Hmm.
Crude. Okay, now this
Getting
one's
tighter, getting tighter. I was noticing that on my review. It's just tightening up even more.
yeah, man. We talked about this last week. When they get this about winding up this tight, and we talked about this triangle. We hit crude every week, and it's looking like it's ready to move. That's sooner than later, because how much I'm trying to think, like, how much tighter can this get? Not sure what more to say other than, if we break this, it could be the start of a bigger move. And 73.50 is our marker to the upside. That's our bracket. If we get above that, usually there's enough juice to go up and tap 79.50. And if 79.50 is really the key, if that's 50% of the square, if we can settle above that, then we're looking at, crude in the 90s to the upside. Downside is fairly limited. We could do a little fake and come back down. And I've been wanting to see if we can do a false break and hit 61.60 at least, come down
Hmm.
here. So to get everybody on the wrong foot. We haven't done that so far. So we'll continue to watch. Let's see what happens here. And looking at the weekly crude,
It's dull, but chaos follows the dullness.
yeah, it just keeps me. It makes me think like they're all waiting at the station for the train.
Hmm.
It's like a big
Yeah.
waiting game,
Yeah.
and a huge triangle. I mean, this is going to be unbelievable. So let's see how this all works out. Like I said, a little false break would be great, but if we don't get that, oh boy, we have plenty of upside. However,
Hmm.
we decide to take that. I mean, crude is going to be a really interesting trade next year once it gets out of this situation, right?
Speaking of triangles,
Yep, holding perfectly inside. We'll see what happens. There's not much to do here. It's just, like within the triangle, it's just a bunch of slosh. And here
hmm
we're below the 50% of the square, which happens to be at 2668, 69. Yeah, 28, 26, 2669. So as long as we're below that, we're correcting. And if we're in hold above the lower trend line, great. But we're still correcting and kind of winding up between these spaces. If we break that, which we already tested the 180, so we can get down there again. But it's okay. Triangles are better than straight downs if you're bullish.
I mean, that's a nice correction after a huge move. If that's all they get is this triangle, that's a really good correction.
Yeah, yep. And gold does that. I mean, we had a triangle here before we broke out, and we're doing another one.
And if you look at it, Barry, we had basically from the May lows, we had two squares up, and we basically pulled back one square high to low. So
Yeah.
it's
Tec
it would
Technically,
be
gold is. Mhm.
yeah a very bullish normal correction.
Yes, this is definitely bullish, still bullish. And if we can get about the 50%, there's 2669 I talked about to be very bullish.
Mm-hmm.
And obviously, that's all set up on the daily or the weekly chart, which is really where we got to watch for the longer term. And I mean, this thing squared out perfectly. A couple of bars off, but it's good enough for gold.
Mm-hmm.
2797 was the high that I had marked off. We tapped it 144 right there. So very, very nicely done. And the counter trend came in. So we took out that counter trend high to the low side. So, at that point, this is in some kind of a correction mode. That's why we're seeing that triangle. And, even on a weekly basis, right? Even if we get down to 2480, we're in good shape. So,
Mm-hmm. Yeah.
so gold has a little bit of space to move around and still kind of hold a good spot. So that's what's happening in gold. Let's take a look at copper. And I know you guys have been wanting silver, and I'll add silver next year, and
Okay.
we'll go with that. You can see I have a silver chart here, but I'm not
Sure.
ready to. We'll talk about it. So copper, pretty much like we talked about, it's like the crude chart. It's winding down and really kind of coiling. But we have a little bit more time for that. ABCD completed to the downside, and then we managed to get above the 50%, the full square at 405 degree square. And it's holding above just fine. So long as we can do that, holding above 4. Copper's in pretty good shape long term,
Mm-hmm.
even though this is a daily chart. Let me see if I can look at the weekly really quick. It is a triangle, and we are holding right below the 144, but it's doing okay. We haven't, just because we're below the square, we haven't really dropped. That shows a little bit of strength because we have some structural support here. You can see right through there. So we're holding that. And so we'll see. We'll see how it happens. It's also a triangle kind of a formation, so not much more we can say. I would
Mm-hmm.
watch the daily for those 405 level if it's going to break down, and I think that's the key there. All right, let's move on to the dollar. Anything you want to add to copper? Not much, right?
Not, yeah, I think you got it. It's like a lot of the commodities is going sideways, waiting for the next move.
Mhm. So the dollar, we're sitting on top of the square. We're definitely clearly above the 107.25. There's a little
Yeah.
buffer area here. So this is bullish. I mean, if it was a false break, we wouldn't be here for that long. So now it's not, it's out of that false break realm, let's just say.
Mm-hmm.
And it's looking fairly good. And I would say not just at the at the square level, which is about 107.80. I'd say 107.25 and above is very bullish for the dollar still. And well, so that's that. And now we're kind of above all of this. If you noticed, quietly that's what happened. The 107.25,
Hmm.
we go back all the way down, back to the October highs in the dollar that we had in 23.
Right.
We got above that quietly. And we had all these ABC terminations up there. So anyway, we got above that. Now we're quietly sitting there, and this looks very bullish to me. And it makes sense what's happened to the yen. So
Sure.
that's the daily. Let's take a quick look at the weekly. So weekly is just looking great. I don't know what else to say.
Yeah, there's nothing wrong with that.
Nope. Well, on the first pullback above the 50% of the square, we held it fairly well and ran right up, and we have ended up with the inside week. So obviously, next couple of weeks are going to be important here, especially if we can somehow get above this 108 level, which is 2/3 of the square. And that'll open it up right up into 112. And anything we're doing above the 50% square here, about 106, especially 106 3/4, it's all fairly bullish action. And we've talked about this ever since, we held the 90 here. So this is still looking fairly bullish. And if you want to know where the 50% is, well, it's April, end of April. It's May 5th,
Hmm.
April 28th, right there.
Hmm. Hmm.
So there you go. But this angle is just ridiculous,
It
So,
is. It is.
not that we haven't seen it before. We had this run in the early 20s. So let's see what happens here. So basically, not bearish
No,
yet.
no. And 112 looks to be a reasonable target.
hmm Well, here's a euro kind of hanging right at the 90.
Yep.
We have some support here, and it looks like it's just holding. And boy, if we slip through there, that really opens it up. And we talk about this every week. So let's see what happens. Trend seems to be down 90. Doesn't seem like it's really holding. I mean, it's holding for now, but this is not the kind of price action you want to see in a bullish euro.
It should, if it was bottom, it should be getting out of there, like pushing out.
Yeah, in kind of a hurry, right? So
Hmm.
it looks a little weak. And I think we talked about this earlier. If we, this is coming off the high in 23. If we take it to the high in, September, October, we did just about 90 here. So sure enough, it should stall a little bit, but it's not getting any kind of a big positive reaction off of that. Yeah, Ben, you were going to say something?
No, no, that's it.
Okay, let's take a look at the weekly, rounding this thing off. So weekly, we're the other way around. We're not, we have the square coming off the low, and we're stalled at the 50% of the level. So again, I
Hmm.
mean, when we say stalled, we mean right in the middle last week. Very, very tight price action. So get ready for something in the next couple of weeks. Looks like I don't think it's going to be quiet because we can't really sit exactly on the square for too long. It's going to get pushed, and it looks like it's getting pushed lower, especially with the break of this. I mean, here is kind of an easy one. Let's see if it really works out. But we had a triangle, we had a false break. So if it's to the other side, if this is the real direction, obviously this is not it. We have to go further, just even the triangle measurement. So I don't think it's done, which means the dollar's not done, which means everything kind of locks into place, right?
Agreed.
Yeah,
Agreed.
yeah.
Hmm.
That's it for the major markets. Well, I should say that's it for the major markets. We have the Hang Seng here, and it's behaving pretty much according to what we talked about. We held 72 in November. We rallied, and on the pullback, we held about 19,450, which has been one of our levels we're watching. And we're in this zone, and we talked about it last week, how we could probably consolidate here for a bit, but it's a very bullish consolidation. And if we get above this 2380, obviously 50% of the level becomes the next target. That's 21,550. So if this holds, that's kind of where we're going. And there's also an ABCD that heads up that way. So we'll watch
Hmm.
it. 2380 is the key. a 19,450 is the key to the downside, and in between, we have to let it consolidate and finish up. And you're covering natural gas, so we're
Yep.
good. We're good there.
Hmm.
All right, let me put it back to you.
Okay.
All right. Well, speaking of counter trends stalling out at 50% squares, that's not so
Exactly.
bad.
Yeah. No, that's a very nice counter trend spot to end.
Yep.
So what we're looking at, we had the high come in, the sharp pullback held at, we got below, but we didn't stay below. We held on to the full square, which is the
Hmm.
225 at 21,366. And
Hmm.
now we've had our bounce, and essentially if you look at it, you had an inside bar and then two up days, and then we just rolled right over.
Right. Well, the key thing is that the 50% year number there, 22,090, right?
That's correct. And so the key spots here to watch are the half square at 22,090. If we can exceed it and get above it and stay on top of it, that means we're going, probably up to this
820. Yeah.
820. Or do we get below and stuck below 21,366, which seals this high and says, okay, we're at least going to do an ABCD, and maybe it's a bigger sort of wave three push down.
Hmm.
So those are the key levels to watch. 22,000 this week, 22,090 on the upside, 21,366 on the downside, and that's daily basis. And you can also see why this is important because look, that was that high, that spike high we made in early November, right? And then so that it's structural support now. So if that gives way, it's
Hmm.
it's pretty meaningful.
Right.
Timing wise, I was checking to see we did 112 high to high, which is not a bad number. We did 95 low to high on this last run from the August 5th lows.
Hmm.
So it's a little more than 90, but it's in the ballpark.
Well, 96 is a square one number, so that's okay
Yeah.
there.
Yes. So it's right there. So they're decent numbers here at this
Hmm.
high.
Hmm.
So let's see this coming week we watch these two levels daily basis, then we'll have a very good clue as to what we're going to do next. Let's go to the weekly. Take a look at the weekly. Key number on the weekly. I mean, the main thing on the weekly, which we talked about before, is timing wise, we squared out. We got our square here. Um, Timing wise, we turned right down last week, did an outside week, didn't get the outside reversal, but we had an outside week. This week we had an inside bar, just sort of consolidating here. So just as with the S&P, we'll watch the high and the lows this week to see which one gets taken out first. Weekly basis, because of the high we made in July, 21,082 is the key, this half square. If we can stay on top of it, it remains bullish. If we get stuck under, then this high becomes much more significant. I'm still of the mind, Barry, just from timing that this July high was the correct high, and this was all sort of like an overthrow.
Yeah, it could be.
If it turns
Happens.
out, yeah, if it turns out that we go down from here, the timing and everything in July was perfect. You had 90 weeks, you had 225 weeks right at that high. So we'll see. Let's take a quick look at the monthly. You can see what the key level here is, 2878.
Hmm.
Get below that monthly basis, then this becomes just a false break or a throw over, if you will. And then we roll back down again. Anything else you want to add on the NQs before I go on the daily? I want to show you the daily calendar day as well.
Well, I was just going to say that monthly looks like a really going to be important one to watch
Yes, this
once we
28.
wrap it up. Yeah.
Yeah, I mean, we've got what, 2 or 3 trading days left this month, so
Hmm. Hmm.
let's see what happens. And then the next bar will print, and we'll start seeing where we start getting prints on that. Take a look at this calendar day, though. This is the one that's really
Get some good
showing,
counts.
yeah, really showing the story too, right?
Hmm.
We pushed up above, sharp move down, and now the pullbacks come right up to the 360. And this is 360 from the October 22 low.
Yeah, the full run. Yeah, well, if you're going to finish at a great place, this is pretty good.
That's the spot. That's the spot. So
Mm-hmm.
if this turns out to be a lower high and we take out this low, we could get a really fast move out of here.
Mm-hmm.
And that's the kind of the setup that we look for. As long as
Yeah,
on
yeah.
looking at this, as long as we're under this 22,000 area, 22,060 to be exact, we're vulnerable.
Mm-hmm.
We're in a position where a fast move lower can happen at any time.
Yep, exactly.
Look at this pullback though, Barry. Look at the perfect structure on that
Yeah, yeah, it's beautiful.
with the July high. So
Hmm.
this is a nice chart in that it sort of ties everything together. There's decent counts in here as well. But it's the bottom line looking at this as well as the other NQ charts is that we are in a potentially vulnerable and weak position if we cannot sort of get a rally going that can get on top of these key levels.
Yeah.
You know, daily basis, weekly basis, monthly basis, calendar day basis. When all those things kind of line up, you really got to pay attention because the moves, if they come to fruition, the moves out of there are pretty powerful.
And all most of the indices, just all the counter trend levels stalled exactly at the key price level. So,
Mhm. All the more reason why you got to pay attention.
hmm.
Pay attention and raise some cash. All right, let's jump over to Bitcoin. Speaking of raising some cash, I talked about this. I talked about this when we squared out here that not a bad idea to raise some cash and protect capital. I still think Bitcoin is bullish, just because you can see we could pull all the way back to this 73,666 and still be very bullish on a daily basis. But that's a hell of a pullback from 108, 106,
Hmm.
105.
Hmm.
So protecting capital is not bad. We also violated the one by two here this week.
Hmm. Hmm.
Again, it's another sign that the parabolic move, this one is over. And now we're
Hmm.
trying to see what comes next. Do we just correct and go sideways, which would be super bullish? Do we have a steeper correction that's still bullish? Or, was this game over and we're now, heading down on a
Hmm.
strong retrace?
But that three drives, boy, that really looks like it's going to set up for a longer, deeper pullback than otherwise.
Yeah. And I think that's an astute observation. And when you see the weekly and the monthly, you'll see why we
And
agree
you have
with
an
that.
ABCD there that goes to your next full square to 85. Wait, yeah, maybe 80. It looks like it get down
Let's
there
see. Yep.
a little below. Yeah.
Yeah, that would be a nice correction
Hmm.
and still
Hmm.
be bullish because look, you'd have air over all this here.
Yeah, well, it might
So,
be bullish, but people are going to be in a panic.
well, the
Just
the
looking at the memes from, just this little correction.
yeah, the over levered people certainly will. The Michael Saylors of the world, I think, would be in a bit of a panic. But let's see.
Hmm. Hmm.
Let's see. Here again. Look at the weekly.
Yeah, well, there you go. There's a reason to panic.
That's not a joke, right? That's a
No, no.
major that's a major square,
Yeah,
right?
and a solid one. It's just very solid.
Right on timing,
Mhm.
right on price, and we're getting a reaction.
And you know that 108 weeks is nothing to mess around with.
No, and so it's the idea is pay attention, right? Pay attention. If you're in it, are you willing to ride it back to 72, 73 or more? Are you willing
50.
to ride it back to 50?
Mhm.
If you are, no problem.
And
At
why would
least
you? But
and
anyway.
but at least you have the knowledge and can make the decision consciously as opposed to having it happen and say, "Oh, I wish I would have."
Yeah, true.
You know?
Yep.
And so this is just, it's giving you the information, giving you the analysis. Everybody's situation is different. You do with it what you will, but at least you know that the geometry, the price and time synchronization are all in place on multiple levels, not only the daily, but the weekly. And let's take a quick look at the monthly. Monthly 93 is a key level. Right. If we get stuck below 93, it looks like we're going to head back to, mid
Hmm.
70s. So on a monthly basis, we want to watch this. And with these circles, it's strange, and you can see a little bit here. Sometimes you can ride the outside of the circle. So is it possible we ride the outside of the circle on the way back down, in this correction to 74? Absolutely. Could it get crazy and get all the way to 56? Absolutely. But this is not a bullish monthly bar, right? If we close down in here, everybody up here sort of was holding bags.
Especially if we take out the low, monthly low.
Yeah. So
Hmm.
caution on Bitcoin now, short term, longer term signals saying, hey, be careful. Oh, we didn't even talk about the timing. How about 90 months, Barry?
Well, now I'm panicking. But
I forgot I was going to because I know that's big for you.
Mhm.
If you go from May of 2017
Mhm.
to the high,
Mhm.
one month off the high, it's 90 months.
Wow, pretty good.
So
Mhm.
90 months is big. It's a
Mhm.
big deal, and it's worth paying attention to. Again, does that mean it's over for Bitcoin? No. It just means that this whole move of the last, I don't know what you want to call it, 6, 7 years might have ended. And so something else is coming. Do we know what that something else is yet? No. Will we know as price action unfolds? We'll have a decent idea. But it's pretty. Uh, the evidence is fairly strong from the larger time frames, monthly and weekly, that something's ending at this high. We just don't know what comes next. Is that fair to say?
Yeah, I think so. Yep.
Anything else to add here on Bitcoin?
No, very good. It, it's all there. What more can we say?
Yeah. Yeah. So
We
let's.
have a decent target to the downside. We upside is in. That weekly chart is just crazy, the 108.
Mhm.
And it's funny, 108, and we hit 108 on price.
Yeah. Yep. All kinds of little clues there.
Yep.
So
So,
let's shift gears and talk about the commodities. I think Barry showed you a few commodities like gold, crude, copper. They're all correcting, right?
mm,
Correcting in different ways. Gold is sort of triangulating near the highs. Copper had a sharp pullback, completed an ABCD, and now it's sort of consolidating in a triangle. Crude has just been in this really tight squeezing triangle for a long time, going sideways. And I think that's a good sort of sample of what's happening in commodity land. The
mm,
grains are, there's no question the grains are bottoming. Corn has been leading them, and corn is just sort of grinding, but it's not clearing a level where I could say, hey, it's all clear. Let's jump into corn and we can ride it up. Wheat and beans are also bottoming out. I think we got to watch them, let them continue their it's kind of a grind near the bottom, but you can see they're exhausting the sellers because the sellers don't have a lot of power to push it down anymore. It's
mhm.
just there's not enough buyers stepping in yet to actually launch it to where we can say, okay, momentum's kicking in. We want to be in these things. Sugar is pulled back. Cotton is continuing sideways. The one I want to bring to your, one of the ones I really want to bring to your attention, and it's really interesting to me because, this is, as you know, our bigger picture thesis is this is a secular bull market in these commodities. So we're not interested in shorting them. We're looking for positions to or
Mhm.
places to go long. But
Hmm.
one that I think the short is just screaming right now is cocoa.
Yeah.
And I'm gonna show you the evidence why. This is a daily,
Hmm.
and the daily is interesting in that we did really powerful moves that squared out here,
Hmm.
here on the downside, and then we got this launch up, and look at where this thing has squared out. Um, on a daily basis, we're talking about uh 45s, right? I have this
Yeah.
45. So if you say it's 90, there's one, two, three, four, five squares of 90.
Hmm.
So 450 here and 315 in price. And look at the reaction we got off of that. It's kind of reminiscent of the action we got off of this one, which also squared out 270 by 270. I mean, it was off a little bit in timing,
Hmm. Hmm.
but it's 270 by 270 there. And then look at the reaction. We
Yeah.
got a full three square reaction. The danger here is look at where this happened, Barry, right? Previous highs were all the way down in here, right? You could say
Yep.
here, you could say
Hmm.
here. This reaction came, and look at what it did at the previous high. It's sat there for about 4 or 5 days, and then the last 2 days this week, look at what happened.
Just gave it up.
Yep.
Yep. Hmm.
And now this becomes sort of a false break structure.
Hmm.
So what we're going to be watching is watch the pullbacks here. If we get stuck under this 270 level, which is around 11,500, this is a major short because that means we're going to retrace. If we retrace 50% of this move,
Hmm.
we did one, two, three, four, five, six, 7 squares up. So if we go one, two, three and a half, you're talking about
78,
7,800.
78,
Yeah.
78. Hmm.
And if we pull back up into here and fail at 11,4, that's like a 50% move, right?
Not bad. Yeah. Yeah.
4,000, you know,
Hmm.
40% move potential in cocoa. Needless to say, if you're long, you need to pay attention because there's a lot of risk here
Yeah.
and a potential major short is setting up. Now, here's why I'm saying major. So that's all the evidence I gave you. That's a daily basis. You can say, well, what are the weeklies and monthlies doing? If they're still bullish, I don't think you want to step in front of the train. And I would agree.
Hmm.
But look at what they're doing.
Wow. Okay.
All right. So
Hmm.
here's a weekly basis. That's a 162 by 180. So that's 180 weeks
Hmm.
and 162 up in price, which is 144 plus a half square.
Okay.
And the interesting thing, remember we were talking about just in the S&P how you said, well, we had a good square, it reacted, and then it went and made a new high.
Hmm.
You know what
Good
we had right?
square. Yep.
144 by 144, which in commodities like cocoa is a fantastic square.
Hmm.
Major
And I remember
reaction.
you calling that out at the
Yep.
time. Hmm.
And here's your major reaction to it, right?
Yeah.
A 2 square pullback, basically 1 square in time. And then we have this launch to a new high. And then what happens? Oops.
Got clobbered. Whack.
I mean, we just got
Mhm.
slammed back below the 144. Now, until we were talking, I didn't, sort of put it together that the S&P could be doing a setup just like this.
Hmm.
When
Hmm.
you were calling out the numbers of the squares, the 252 versus the other one that came in.
Hmm.
This again is a weekly setup.
Yeah.
144 on a weekly basis is no joke. 180 on a weekly basis in time is no joke.
No. It's a horror
So
show.
this
It's a horror
this
story.
and it's a weekly false break, right?
Yeah.
One week we made the high, next week we're back below the previous high.
Yeah. Definitely false break. Yep.
So this is a major warning signal that you could have a significant top in there on a weekly basis. So now we got the daily. and the weekly in cocoa that are lining up.
Mm-hmm.
Let's look at the monthly, and you got your trifecta here. Okay, major high here, right?
Mm-hmm.
We made it, pull back, go up and make a new high. That's 180 up. So the square we're getting roughly on a monthly basis here is 180 in price
Mm-hmm.
and a little over 360. I mean, you could say it's not exact, but it just depends on, where you're going to measure from. But you
Mm-hmm.
basically have 360 in time here.
Mm-hmm.
And if you look, Barry, from here, these are the ones that are really key that are off the square, right? Because I have the square set way back here in 94. If you go from the 2000 December of 2000 low
Mm-hmm.
to the exact high, it's 288 in time. That's 288 months, which is 144 twice.
Right.
Good
Pretty good.
timing, right?
Mm-hmm. Mm-hmm. Mm-hmm.
And remember, you have 180 in price up. If you go from July or June 2017 lows to the high, you have 90 months. So basically, the beginning of this consolidation that launched this thing to the high, 90 months.
Wow.
The beginning of this move that launched this whole thing, I mean, the low
Right.
to the high, 288 months.
That's
And
huge. Yeah.
it's big timing wise. And we stopped on 180 in price after squaring out here. Look at that square, right? That was 360 by 162. Good. It's that, oh, you fool everybody, right? You make the square, get people short, they make some money, and then they get it rammed right down their throats, right? With a new higher high. But the high
Yeah.
doesn't hold.
Mm-hmm.
I mean, look where we are. Look where we closed Friday.
Mm.
Not only are we below that high, we're below the 144,
Which is what?
around 10,500. So putting it all together, wrapping the present, putting the bow on it, you have daily squares, daily false break. You have weekly squares with good weekly timing and a false break.
Mm-hmm.
You have a monthly major timing of 90 months and 288 months, which is a long time. That's months. We're not talking about 90 bars, on a 5-minute chart. We're talking about 90 months and 288 months and 180 in price up and a false break on a monthly basis.
Yeah. That's
It's
pretty
it's
good.
it's
Mhm.
pay attention, right? You got to
Yeah.
pay attention to this. And now, so Barry, what do we always say when these sort of things come in? What's the thing you have to look at first?
Well, counter trend
The
is a good
count, the
start.
first counter trend. That's right.
Hmm.
So we're going to watch and see on rally attempts, where does price fail? Where does it run into the sellers? Is it here? That would be a great spot monthly basis. Is it 10,500? Is it near the old highs? That would still be a good spot, right? Which is
Hmm.
around 11,700. So I'm not saying you run out and short cocoa. It's super aggressive, but I'm saying watch the price action here for lower highs on the counter trends because it could set up a big move. And what do these commodities do when they have these kind of moves? They'll retrace the whole move sometimes.
Hmm.
So you could be talking about a run back down to 3,600 ultimately,
Right.
where the whole thing started. Certainly testing these lows or maybe taking out those lows around 6,500 is in the cards. So major alert. I posted something on X this week, but I just showed the daily. This is the more in-depth evidence that I told you would be coming in the video, which is weekly and monthly. It's a it's a major thing to watch because it could be a tremendous, tremendous trading opportunity in this coming year. Because these are big. Remember, we're looking at monthlies and weeklies in addition to the daily. Anything else you want to add to this, Barry? Because I know these setups don't come along every day when you're talking about 90 months and 288 months.
Well, I think it goes back to, your entry. So, get back into the dailies and look for that low risk entry point, which, you know, and we have a couple levels here, and we'll have to play it that way.
Mhm.
Yeah,
Yep.
rest is good. I think the evidence is there, so it's just a matter of letting your system kick you into the trade.
There you go.
Yeah.
All right, let's go to the next one. Not as dramatic as cocoa, but one that nonetheless looks to be potentially setting up here. That's coffee.
Hmm.
Coffee has made a, as you can see, this is the daily from the lows in 2023. We've made a nice run up to a high here,
Hmm.
and right now we're triangulating. Interesting thing, we had a high, and then we had this high, and then we can't get away from it. I don't think it's as dramatic as I said as cocoa in that, okay, we made the high and then we just shot down. It's consolidating. And this is a triangle. This is still the 2 by 1 from this low. It's still holding so far from Friday. The key price level here is 327.64, which is the full square, right? And
Hmm.
that's 225 up from the low of the square. If we can get on top of this, there's I think another push higher, and maybe it gives us our third drive here, Barry, like 1, 2, and one more is 3.
Hmm.
Um, if we remain stuck under this, then a full sort of a deeper correction may be underway. Maybe we'll lose the 2 by 1 and come down and test the 1 by 1 here, which would still be bullish.
Yeah.
So it's time to, if you've been in coffee for a while, it's time to take some chips off the table. If you're thinking about getting in, we need to see it clear this 327.64 to know that yes, there's another leg started that should be able to push up and at least get to 350 and maybe give us a false break with that old
Hmm.
high.
Hmm. Hmm.
So it's kind of where coffee was. I mean, cocoa was before it made that last push up to the
Right.
high.
Yep. Hmm.
It seems it's the stage before cocoa was when it was doing that. So,
And we want
um,
to see if that triangle that's forming, the tight one, the smaller one, taking into account the yeah, that one. If
mhm.
if that holds, because if it holds and breaks to the upside, then we get that one more leg, right? So
Yep,
if it
we'll have
breaks to the
another leg.
downside, then yeah.
So pay attention there. It's going to give us a clue, right? As to if we break down, then that means this stuff was false break. If we can get
Mhm.
above 327, then we got one more leg to go.
I think that's the key. That 327 is the key here.
Yeah. Yep.
So far
And
we're
that
struggling. It's just stuck below. So
exactly. And it
mhm.
and I mean it's even doing that same garbage that Coco did, right? It's like same spot, day,
Mhm.
day after
Mhm.
day after day after day, it hammers and then it goes. All right, let's look at the weekly so we have a little more perspective.
Mhm.
Big ABCD, right? We exceeded that here on a weekly basis. If as long as we're above 315, we're in good shape,
Mhm.
right? 315 is it's 327 on the daily. The weekly has a little more room. It's 315. If we get stuck below 315, then we got to look like it looks like we're going to be rolling over. So let's watch. Interestingly enough, a 90-week run from the 23 low would put us into July. So maybe that could be the last leg, right? That we get, we correct here, we chop around for a while, and we get one more push up into a July high. Is that possible? Yep. Let's see. We know
For
the
sure.
levels.
Yeah. Mhm.
327 daily, 315 weekly. There is a decent the fly in the ointment here, Barry, which we have to be concerned about. There's a really good square from the 2020 low,
Mhm.
the low before the low, actually.
Mhm. Mhm.
252 by 252. So we got to watch that.
Hmm.
That's why that, dropping it down to the daily, it can give you that 327 level can really help us decipher whether this big square is actually a square that's going to turn it over, or is it just a pause, right? Go back to the daily right here, this level. If we
Yeah,
roll over from here, it could spell trouble. If we can sit on top of that, then maybe it's not that big a deal.
that's a good marker. Yeah.
Yep. Lastly, let's look at the monthly. You can see we got rejected at this half square 343 so far. So sitting monthly basis, if we can sit on top of 343, as we were talking about the daily, we can get up to
Hmm.
350 or more. The If you look at the previous highs, you can see why this area is pretty important.
Yeah.
So if we go sideways here, it's all good, right? It's not
Yeah.
bad.
No, no.
Here, if we get below 283, then we got to start saying, okay, is the party over? And so that's coffee, a little bit of caution, a little bit of potential, a little bit of optimism. We just need more data from the price.
Yeah.
Anything else you want to add here on coffee?
No, we're good. We're good.
Okay. Lastly, let's jump over to natural gas. As you can see, Barry, we had a little bit of a square here, right? We had price and
Hmm.
time,
Sure
and
did.
we got a reaction off of it. But the important thing to look at is where are we battling and where do we close? Right
Hmm.
on the half square.
Right.
Half square here is at call it 341. So what we want to see for the bulls is we want to see us stay on top of 341 because then we can go and attack this high, and sort of escape this upper channel line that we've been battling with
Hmm.
since November of 23. If we get stuck below, it looks like we're destined to, head back down to the lower part of the channel around 303 and possibly even the full square at 282.
Hmm.
It's not terrible, right? We did square out actually I was looking at my 4 hour, which I don't show the 4 hours, but we had a decent square on a 4 hour there, like a 108 by 288. So
Hmm.
we did get a reaction. Now let's see. So for daily basis, 341, 342 is the level to watch. Let's see
Hmm.
if we can get on top of it or if we get stuck below it. Let's check the weekly. Weekly, you could see the key level here was the 371, and we couldn't hold that. So now we're pulling back. Uh, Most likely because we had a big up bar this week. Let's watch and see. Do we get an inside bar? Do we get another down bar? But let's watch and see. As long as we're holding above, the triangle breakout, which is right around 3, which coincides with the full square on the daily, I think we're in good shape. And we may just be, sort of burning off a little time here after this decent move we saw higher from,
Hmm.
from the lows in October. But 371 weekly basis is the key. We want to get above, sit on top of that, and then we open up, the half square up here, which is around 472. Monthly basis, you could see we have a monthly up bar. We just broke out of the triangle. So this backening filling action that you're seeing on the daily and the
Hmm.
weekly, is not a negative at all on this monthly chart. The 90 in time, if we do what we did in the previous cycle from low to high, puts us into 2027. So I think, focusing more on the half square up here, 488 is the next target is probably monthly
Hmm.
basis is pretty reasonable. Anything else you have to add on nat gas, whether daily, weekly, or monthly?
Well, we've been talking about the lows as they came in and as the triangle is forming on the monthly. And now we have a trend, and the trend seems to be up. So
Hmm.
I think we should all know what to do. Trade it to the
Yeah.
long side. And yeah. Looks good. I mean, it could take off on short notice, so I think you really have to be on it.
Absolutely. And it as you if you do trade nat gas, you know it's very weather related. We're into winter. If a cold snap comes in, this thing will fly. So and we know the setup is bullish, so we know which direction it'll fly. That's Barry, that's it for me on the commodity side.
Hmm.
Being that this is our last show before the new year, I wanted to thank everybody for the support this year, for subscribing, for
Hmm.
liking, for sharing the links, helping us grow the community. We really had a great year, and it's thanks to you all. And I hope you'll continue to do that. Please share the links, uh, like the videos, and subscribe, and we'll keep generating this kind of content because we enjoy doing the shows, especially when we get the feedback that people find it useful and helpful. So
Yep.
everybody have a terrific new year. Barry, great job on the show this week and great job this year. And we'll talk next year now.
Talk about time flying.
Yeah, yeah.
Yeah.
This will be, as I said, this is our last video. Any parting words you have, Barry, that you want to give to the followers?
Well, I'm glad we have a growing community, and which means more and more people are understanding our approach, using squares and not crowding the screens with lots of indicators, a lot of exotic indicators. Kind
Right?
of going back to the basics, we have a very basic approach and simple and hopefully practical. So, and I think people tuning into that, personally, I think that's great, and I like that. That's the part I like about doing these. And if you guys, any of your guys are communicating perfectly, so if you guys have any questions, whatnot, requests, and we try to do the requests as we get them. Like we're gonna add silver next week on a regular basis. So if you guys like for us to add anything, let us know. Otherwise, well, have a great next year. And next year is going to be very active. There's not going to be a whole lot of resting time. I think for trading, next couple few years are going to be amazing. So it's a time to really trade. When I say trade, I'm thinking more about trading the swings and so forth and so on. Maybe not the same old tired bull. So
Exactly. Yep.
so I think a lot of good times are coming up ahead, and you guys are in the right place, I feel like.
So
So,
listen, have a great New Year's, everybody, and we will talk to you next year. Take care.
all right. Good job, Ben. Thanks.
Thank.
We'll talk to you soon. Bye-bye.
Bye-bye.